My name is Affaf Noor. I am a tutor and trainer for Advanced Audit and Assurance. This video is about a topic from AAA, which is Assurance on Forecasts. Instead of doing a knowledge overview or a question debrief, we're going to focus on how this topic is tested in the past exams very frequently. We'll focus on the answering techniques along with how we can get very easy professional skills marks as well. The aim of this video is for you to become more confident about how to prepare this topic, also how to attempt this in the actual exam, and subsequently you should be able to meet the examiner's expectations. We will start off with a checklist of topics that you should be comfortable with. We will then discuss the common reasons for not being able to attempt these questions well in the exam and how to manage these reasons. I'll show you examples of how this topic has been tested in the past. Please remember, this is not going to be an exhaustive list of what can be tested from Assurance on PFI. It's basically an overview of what tends to come up frequently. For each stage of this assurance engagement, we'll then discuss the answering techniques, and we will wrap it all up by talking about how we can aim at getting the professional skills marks in these questions. It is highly recommended that you make a note of these techniques, as they will help you massively while attempting these questions at the preparation revision stage as well as the actual exam as well. Now, in terms of the syllabus coverage that you should be comfortable with, this content has been extracted from the syllabus guide. The best place to revise this is from chapter 17 of ACCA's Study Hub. It's important to remember that it's the application of this knowledge that is tested in AAA. Having said that, unless you're clear on the technical concepts, you won't be able to apply them to the scenarios given in the exam. So please do make sure that your concepts are clear before you go on to attempt the practice questions. Like I said earlier, ACCA Study Hub, Chapter 17. Now, just a quick overview. You're expected to be able to understand the purpose of assurance on forecasts and the level of assurance that can be given. This is a review engagement, so limited assurance will always be given. This is due to the fact that forecasts are uncertain as they relate to the future, and the assumptions involve a lot of judgment. Secondly, you need to be comfortable with evaluating factors to consider before you as a firm accept this assurance engagement. You're expected to be able to plan this engagement and be alert to the fact that the forecasts may contain bias. And we'll talk about the application of all these areas in just a little while. You should be able to design procedures to gather sufficient appropriate evidence about the forecasted information and the assumptions used. And finally, you should be very comfortable with the contents of a report for an examination of prospective financial information, because if the examining team is in a good mood, this could come up as primarily a knowledge-based topic, very rare, but you could also be asked to critically evaluate an assurance report on PFI. Now, as a AAA student, it's very important to remember that this is not a topic which is very difficult to study or understand. However, this is not a topic which is performed very well. So let's discuss the common reasons for failure. As is the case with most topics in Advanced Audit and Assurance, learning and regurgitating that information in the exam is quite useless. For example, if you simply learn factors to consider before you accept a PFI assurance engagement and write them in the answer as it is, you're unlikely to get even a single technical or professional skills mark. The knowledge remains the same, but unless you use the scenario that the poor examining team has spent days writing, you're not going to get any marks in AAA at all. Generally, you'd have 1 mark available per properly evaluated discussion point regarding assurance on PFI. So for a 10-mark question on procedures, for example, you should aim at writing at least 10 case-linked procedures. Again, just in a little while, we'll discuss about the what and why of writing procedures. In addition to technical knowledge and practice, this also requires effective time management skills. In AAA, a well-prepared student generally does not struggle in completing this question or the exam. For me, as a tutor and a trainer, the term well-prepared translates to someone who has done time-managed written practice. So this is an area that I'll talk about quite frequently. So we know why we might struggle in passing the exam. How do we manage all of these reasons? And for me, the only answer is practice. The easiest way to pass this topic or the AAA exam in general is through practice. For PFI in particular, reading the question and then just skimming through the answer is not going to work at all. Ideally, your written practice should be time managed so that you can evaluate your ability to complete the question under exam conditions. Once you've written your answer, the next very critical step is actively reading the standard solution given by the examining team. Active reading means you're going to read the answer carefully, you're going to mark the points that you weren't able to identify and understand the answering technique. We're now going to look at some common examples of requirements from the past exams and the answering techniques for each of these. As mentioned earlier, please remember this is not an exhaustive list. It's just what has been commonly tested in the recent past. To be fair, it covers the entire assurance process from acceptance to reporting anyway, so this will give you a fair idea of how assurance on forecasts is given in practice as well. So the examining team often asks you to evaluate the matters to be considered before accepting such an assurance engagement, or they could ask you to evaluate the assumptions used in the forecast to see if they are reasonable and complete. You could also be expected to be able to design procedures to review these forecasts. Very rarely, but you may also be asked to critically evaluate an extract of an assurance report on prospective financial information. For the rest of the video, we're going to look at each of these stages individually with a huge focus on the answering techniques as well. Now, at the acceptance stage, if you're asked to evaluate the matters to be considered by the firm before accepting a particular client, you need to understand that the key word is evaluate, not list. So if you simply write down, we're going to look at resources, time, competence, the examining team is going to say, here's your big fat zero. So please make sure you understand in AAA, the focus has to be on evaluation. So what do? We're now going to discuss an easy checklist for you to remember that you can then subsequently apply to each scenario given in the exam questions. Now, this is not something that I've made up. This is a requirement of ISQM 1. So when you link these points to the scenario, you're automatically getting your technical and professional skills marks. To start off with, we have to evaluate the nature and circumstances of the engagement. You need to try and link as many of these points as possible to the given scenario. Number one, what is the intended use of the information? Please remember, the information in this context are the forecasts which are about the future. So for example, in terms of the intended use, is this forecast going to be used to apply for a loan? Is the forecast for general or limited distribution? So will this be published or is this meant for a particular stakeholder group? Are the assumptions best estimate or hypothetical? You should know this from your preparation stage, but best estimate assumptions are more realistic. An assurance firm would normally not accept an engagement where hypothetical assumptions have been used. Is it just a cash flow forecast, or maybe this includes a profit or loss forecast as well? So the elements in the forecast, you need to evaluate the period which is going to be covered by the forecast. Remember, if the forecast is for a longer period of time, the risk attached to this engagement is going to be higher, as there'll be more uncertainty in the assumptions. So I might be able to realistically forecast what's going to happen in the next 3 months, for example, as opposed to the next, say, 12 months or a year. The level of assurance affects the scale of work that the firm has to do. As discussed earlier, please remember, this is going to be a limited assurance engagement because of the uncertainty which is attached to the assumptions in the forecast. Go through the scenario and evaluate any concerns regarding the client's integrity and ethical values. As a part of this evaluation, the assurance firm has to carry out customer due diligence, which basically includes looking for indicators of money laundering or any other information that can help you discuss concerns about the business's reputation or the reputation of its key owners and management. So pick up any indication that you have concerns about their reputation. For example, every time this new client goes to an international market, they have been giving greasing money to the government. So you are concerned about there being an element of bribery. So do you really want to work with such clients? If it's a non-audit client, you can write about contacting the existing auditors. Please make sure you evaluate the reasons for not appointing their existing auditors. There are lots of marks for that. So, for example, could it be that they are trying to intimidate the current auditors that they won't continue with them if they don't give in to the client's demands? So, if you have an existing auditor or audit firm, how come you're looking for a new assurance firm? Read the question very carefully. Look for potential of management bias. Does the management have the motivation to show a more optimistic picture? For example, why has the forecast been prepared? Is it for a loan application? You know that if the forecast is going to be used to apply for a loan, they're going to try and present a very positive picture so that the loan gets approved. So when I say evaluation, all these words or concerns have to be picked up from the scenario and written in your answer. Keeping in mind professional standards and regulatory requirements, the firm's ability to perform the engagement needs to be evaluated. This includes their competence and capability. In AAA, simply writing that competence needs to be evaluated isn't enough. You need to explain that assurance and on PFI shouldn't really be an issue as it's a firm, but if it's a high-risk engagement, more experienced and senior staff should be assigned to the team. So like I said earlier, simply writing check staff, check time, check experience is going to be a 0 in each case unless you evaluate whether they have the competence, the staff, etc. See if the scenario mentions a short deadline, as this may limit the resource availability and the quality of work might be compromised if work is done under time pressure. So if they've said that they want the assurance report within the next 2 weeks, for example, you could link it to the word short deadline and do the evaluation accordingly. If the assurance is being given to a current audit client, you can discuss threats like self-review, for example, and then give recommendations on how this can be safeguarded against if possible. Even if it's not an audit client, you can evaluate other threats. For example, conflict of interest with existing clients, advocacy if the firm is being asked to accompany the client to a bank meeting, or self-interest if the firm is being offered gifts or other assignments in the future. Normally, in the AAA exam, you could also evaluate if there's been a discussion regarding the fee, if it's too much, it's too high as compared to audit in particular, or otherwise there could be elements of self-interest. If it's too low, then quality could also be compromised. So you could use your knowledge of ISPA's Code of Ethics to talk about any potential threats, even if the client is not an existing audit client. Finally, at the acceptance evaluation stage, please make sure you give a conclusion, because ultimately the requirement is should you or shouldn't you. So by giving a conclusion, you get technical as well as professional skills marks. So make sure you remember this was the requirement to begin with. So based on your risk assessment, your competence, concerns about management's integrity, reputation, do you want to accept this client or not? So if you pause this video here and go back and make a note of these 5 elements, write down the key points, and the next time you do an acceptance question, use this as a checklist to see if you can actually pick up these points from the scenario. The next category of requirement or question relates to the evaluation and completeness of assumptions. There would always be some financial information given, so please make sure that you use the calculations but not on their own. This stands true for this topic, but any other topic in AAA as well. If you simply do the calculation and do not discuss them at all or use them in your evaluation, you're not getting any marks in AAA. So you need to read the information given and evaluate the trends if there are any. This includes, for example, calculations related to percentage changes with a discussion on whether the trend makes sense. For example, if the calculation shows that the forecasted sales are expected to increase by 28% per month once the planned new coffee shops in a new location are operational, you get half a mark for the 28% calculation only if you discuss what your concerns are. So you need to write that it's a new location, there are new coffee shops. I'm slightly concerned that this assumption is a bit too optimistic. Within the first month of having that new coffee shop in a brand new geographical location, how on earth are you planning on achieving the 28% increase in revenue? Additionally, if there are going to be new coffee shops, how come the forecasted salaries expense is the same? Aren't you going to hire new employees for the coffee shops? So the trend was literally just the 28%, which was for half a mark, but the rest of the technical and professional skills marks are for evaluation. I'm questioning the reasonableness of the instant increase in revenue. I'm questioning missing information, which is the fact that the salary and wage expense has not increased at all in the forecast, in spite of them thinking they're going to be new coffee shops in new locations. Another example could be, for example, if the forecast has been prepared on the assumption that inflation is going to be 1% over the next 3 years, you really have to sort of evaluate whether this comes across as very simplistic. The assumption there will be 1 year for all 3 years is something that needs to be questioned. In another example, if the client has only just applied for a loan, but the forecast is showing an inflow in the very next month, you need to make sure that you evaluate and discuss how they are so sure that they'll actually get the loan. So the possibility that they're going to get the loan so soon needs to be evaluated, because the question says they just applied for the loan and the forecast for the next year is showing an inflow as well. So you need to be sort of focusing on whether whatever information which is based on assumptions that is given in the scenario is appearing optimistic. You'll have to go on to evaluate and question that. You should also be looking for missing information in the forecast. This is very similar to when we spoke about salaries and wages earlier. So for example, in the new coffee shops, in a new location, in the entire question given in the exam, I can't see any marketing expenses in the forecast. So how are you planning on achieving that 28% increase in a new location without any marketing whatsoever? In another example, and this comes up quite a lot, you have shown the new inflow in the next 3 months, but I can't see any repayments in the forecast. So this time around, you're using the notes given, you're using the background information given to evaluate whether something is missing for the forecast that is given. So we've done 2 things up till now, and for the second one, which is the evaluation of assumptions and completeness of assumptions, there's absolutely no technique. Do make sure you focus on calculations and then use those calculations to evaluate whether the assumptions are reasonable. Do make sure that you try and link the financial information with other notes given so that you can pick up information in the forecast that could be over optimistic or it could be completely missing as well. The third type of question that is likely to come up is on procedures or evidence. It's pretty much the same thing. You'd be asked to design the examination procedures which should be performed or audit evidence you would expect to find in the review of the forecast. If I'm very honest, there are some easy marks available in questions on procedures on PFI, as long as you remember to link them to the question. Please remember, this is not external audit and you are not confirming historical financial information. You need to perform procedures to confirm the reasonableness of assumptions and other information in the forecast. The key technique or the key point to remember is, when you're writing the procedures, you have to cover the what and the why. For example, if you simply write, discuss the assumptions with the management, this is potentially a 0 in the AAA exam. You need to explain what you're doing and why. So the basis of assumptions are being discussed with the management so that you can evaluate their reasonableness and compare them to your own understanding of the client. So what are you doing? Having a discussion with the management regarding the basis of their assumptions. Why? You want to compare it with your own understanding of the business and any other external information available so that you can evaluate whether they're reasonable. So this is a very important technique to remember when you're writing down the procedures. Procedures need to be primarily linked to the scenario. Remember, you need to gather evidence about the assumptions in the forecast. I know I sound like a broken record, but a lot of students will end up confirming historical information, which is unlikely to get you any marks in this particular topic. So, in terms of coming up with the procedures, reasonableness of assumptions can be verified through past trends, through past records to confirm the trends, through inquiry, but please make sure any planned changes are incorporated in your discussion. So for example, for my coffee shop example, you can confirm the past salaries from historical personnel records, but you subsequently need to incorporate the new hiring to come up with the forecasted salaries and wages expense. Go through the scenario, see if there's any third-party correspondence that can be reviewed. For example, in our loan example earlier, you can review the correspondence between the bank and the client to evaluate the chances of the new loan being approved. You can also conduct post-year-end work, which can give you an idea about the reasonableness of the forecasted information. This could include looking at post-year-end management accounts, post-year-end bank statements, etc., etc. There are some easy marks in procedures, but please do not just copy-paste them. You need to evaluate to see which of these can be linked to the scenario. Typically, for all forecasts, the assurance provider would confirm that the client's assumptions are consistent with the assurance team's knowledge of the business and the environment in which the client is operating. They would perform a sensitivity analysis by weighing the key assumptions they want to see and evaluate how the forecast would be affected if the assumptions change. They would get a written representation from the management to confirm the reasonableness of their assumptions relating to the forecast, and also to make sure that all information has been communicated to the assurance team. You would recast the forecast to ensure it is arithmetically correct. This is normally half a mark in AAA. You would review the outcomes of previous forecasts and match them to the actual results. You're basically trying to evaluate how effective their prior forecasts were. You can assess the competence and experience of the person who prepared the forecast, and you can confirm the consistency of the accounting policies used by comparing it with last audited financial statements. So these procedures are primarily knowledge-based, but please try and make sure that you start off with scenario-linked procedures and then go on to discuss these ones. Although not very frequently tested, but you may be asked to critically evaluate the proposed assurance report extract, or if the examining team is in a generous mood, they may ask you to discuss the contents of the assurance report, which would be issued on Prospective Financial Information. So one of those could potentially come up. The key technique is, as long as your knowledge of the contents of an assurance report is clear, critical evaluation would be a piece of cake. So, for example, you need to check if the addressee is correct. The addressee should be the intended user of the report. Does the report specify what forecast the assurance relates to? So ultimately, the specific elements is what we're looking at. Is it just the cash flow forecast or other examples as well? So you need to make sure that's written in the report. Is the period covered by the forecast mentioned? So is it 3 months, 6 months, 9 months? Has a proper reference being made to the standards that you use to give assurance? This is basically your International Standard on Assurance Engagements 3400, which is the examination of prospective financial information. So once you've learned what an assurance report on PFI looks like from ACCA's Study Hub, you should be able to use that knowledge to critically evaluate whether this has been made properly. We're going to now move on to the last section of the video, which is your professional skills marks. In section B, you are tested on 3 professional skills: analysis and evaluation, commercial acumen, and professional skepticism. Now, in questions related to assurance and PFI, there's not much extra that you need to do, so the effort pretty much remains the same. The key point to remember is, as long as your evaluation is strong, ultimately your professional skills marks will be there automatically. So, for example, you would get a professional skill mark for giving an appropriate conclusion. The conclusion could be on acceptance procedures, they could be on evaluation of the assumptions. So a conclusion to say whether you feel the assumptions are reasonable or not. You get skepticism marks for challenging management's assumptions and probing into judgmental areas. So this is an estimate. The management is saying this is going to be 28% increase in the very first month. Really, that doesn't make sense. When you identify missing information, you get professional skills marks. Throughout the question, wherever you've discussed management bias or picked up that the management is motivated to overstate inflows, for example, you'll get professional skills marks. When you discuss concerns about the management not being honest, so any indication they're concerns about their integrity, you get professional skills marks. When you question the disparity between trends, so the sales forecast shows an increase in revenue, but the salary and wages is the same. This is a disparity between the trends. This evaluation will get you a technical mark along with professional skills marks. Commercial acumen is there substantially when you have discussions around assessing professional and ethical issues. Very major focus was on the acceptance requirement. If you feel by accepting this engagement or the fact that the report is going to be used by a bank, your firm could be exposed to potential litigation, again you get a commercial acumen mark. By working with a client which has a poor reputation, your own firm's reputation could be affected as well, a commercial acumen mark. Suppose it's a specialized industry dealing with chemicals that you've never worked with, and therefore you might not have the experience for that specialized industry, you could get commercial acumen marks as well. Just to wrap up, I would highly recommend that you watch this video again and make notes for each stage of the assurance engagement separately. You can then apply these techniques to your written practice. You will note that this will help you manage your time effectively and better, and gain confidence about your ability to handle any questions on forecasts that might come up in the AAA exam.